What's going on, guys, and welcome back to another video. So over the last few days or even weeks with the markets being volatile, I thought I'd do something a bit different today and discuss ETFs. So in today's video we're going to discuss the top 5 ETFs in my opinion on Trading 212. In my opinion, ETFs are a brilliant way to diversify, especially in some of the larger ETFs. In today's video I'm going to give a few ETFs from around the world, so I'll give different perspectives, e.g. they won't all be in the US market for example. And I'll discuss their current share price, we'll have a look at their charts, their top holdings, and we'll have a look at some of their top shareholders as well as their tickers. I currently already hold 3 of these 5 ETFs, so we'll get those 3 out of the way first, and then I'll discuss 2 more ETFs that I'm actually quite interested in and I may even invest in down the line. But just before we get into all of that, can I please ask if you're new around here to consider subscribing to the channel, as we are now only 25 subscribers away from our next mini goal of 700. And with all that being said, let's dive right into today's video. So the first ETF I'll discuss is one I already hold, albeit only a small position with about €100 at the moment. That is the iShares Global Clean Energy ETF, ticker symbol INRG. One of the main reasons why I like the Global Clean Energy ETF is because it's definitely the way forward in terms of clean energy and renewable energy. So as well as this ETF, I also have Chevron and ExxonMobil, 2 of the more old school energy stocks in the form of oil. So I believe having an iShares Global Clean Energy ETF is a brilliant way to diversify your energy sector pie. That's if you have any other holdings in that. And I do believe over the coming years that this kind of ETF in clean energy is definitely the way forward. We can see on the 1-year chart that it's currently sitting at about £12.77. This time last year it was sitting at about £7. So we can see the progressive way it has went up over the last year. It went up to about £14.18, and that was kind of just when Biden got into office. However, it has had a bit of a dip, but I do only think that's going to be temporary in my opinion. And again, it's only going to go on an upward trajectory over the long term, I think. We can see their top holdings on screen now on the iShares.com. So Plug Power is their top holding, and in terms of exposure breakdown, we can see that the US makes up 36.6% of this ETF, followed by China, New Zealand, Spain, and Denmark coming up in the top 4 countries. 2 main reasons why I'll continue to buy this ETF is firstly, I'm all for renewable energy, and I think it definitely is the way forward, especially now with electric vehicles taking such a high dominance in the market. And we can also see the second reason why I like this style of ETF is because of Biden and the US presidency. So with a Democratic presidency and control of both US houses, the door has been open for a raft of pro-renewable policies, such as Biden's pledges to commit $2 trillion to the climate-related investments, push towards a carbon-neutral power sector by 2025, and a net-zero economy by 2050. So that's definitely huge news for clean energy ETFs. It's probably no surprise that the second ETF on the list is the Vanguard S&P 500, which tracks the top 500 companies in the US. This is ticker symbol VUSA, and I currently have about 10.3 shares in this ETF. We can now see on screen the Vanguard S&P 500 in terms of the 1-year chart. Now, because this is on the London Stock Exchange, this ETF is priced in GBP. So we can see that this time last year on screen, it was trading at about £47.50. It had a huge nosedive, as like most ETFs and stocks in general, in March, and we all know the reasons for that. It went down to about £38 a share. But since then we can see the progressive growth over the last year, and it's currently sitting at just under £52 per share. In my opinion, the S&P 500 is probably one of the best ETFs in terms of diversification, and it currently tracks about 505 of the biggest companies within the US. Again, 100% of this ETF is in North America, and if you scroll down here, we can see that their top holding in sector form is in the IT sector with 27.6%, followed by healthcare and consumer discretionary. If we follow down here, we can see their top holdings overall, and it's kind of no surprise that the majority of these are in the tech industry. I really do feel as well that if firstly you're new to investing and you want to invest in US markets due to the volatility over the last few weeks, I feel this would be a great entry point, as this will give you great exposure to all different sectors within the US market. So again, at the start of this video, I said I wanted to diversify across the globe. So we already had the iShares Global Clean Energy ETF, and we had the S&P 500 tracking the full US overall market. Now we're going to go back across the water, close to home, and we're going to look at the FTSE 100 GBP, which tracks the top 100 companies within the UK. This is ticker symbol VUKG, and I have about 3 shares at the moment. We can see from the 1-year chart on screen This time last year it was at about £32 a share, and it's currently sitting at about £28.6 per ETF share. So again, it's down, and that is probably due to 2 or 3 main reasons. Obviously because of the virus, but another reason as well would be due to Brexit and all the volatility that can bring as well. Again, the UK is still in lockdown, so there's a lot of kind of uncertainty in relation to this market. But again, just like anything, it always recovers over the long term. So I feel that at current prices, this FTSE 100 GBP ETF is certainly a buy in my opinion. So at the moment there is about 102 stocks within this FTSE 100 GBP. Again, it's no surprise that they're all situated within the UK. In terms of their top weighted exposure, they have consumer staples at the top with 20.3%, and then financials in second place with 18.6%. So that we discussed a while ago, the S&P 500 had the tech industry in their top weighting. I think it was about 25% or so. So it's quite interesting to see how different countries kind of have different weighted exposure for different sectors. So we can see down here, tech is only about 2% of the overall FTSE 100, whereas consumer staples again leads the way with about 1/5 of the overall weighting. So definitely, as a long-term investor, I feel that the FTSE 100 GBP is certainly a buy at current prices. Again, you need to be long-term in ETFs like this, in my own opinion, because there's a lot of volatility coming up over the next few months or even years, especially within the FTSE 100. So if you're a long-term investor, certainly at about £28 is definitely a buy in my opinion. So the fourth ETF that I decided to pick is the FTSE All World Share High Dividend ETF. Again, there's probably 2 main reasons why I like this ETF. Firstly, because it's dividend paying, obviously due to the name High Dividend. And also, as well, another reason why I like it is because some of the ETFs that we already discussed, e.g. the FTSE 100, which was in the UK, and the SP 500, which is in the US, this all-world ETF really kind of encapsulates all of the world. So you have exposure to a lot of different markets. So that's one of the main reasons why I like this ETF. This ETF is currently sitting at about £41.35. This time last year we can see it was sitting at about £44.25. So it is kind of not fully recovered in my opinion, since it had a very drastic dip. In March it went from about £44 down to about £30. So it went down about 25% within that short space of the few months there. But since then we can see, even though it has been quite volatile, it has always kind of went in an upward trajectory. And especially here where we can see at the end of October, where it went from £36 all the way up to about 42. It had a bit of a dip. Again, it went back up over the last recent few weeks, but it's since after having a bit of a decline. So in my opinion, long term, again, just like the FTSE 100 and the SP 500, I believe there's a lot of long term potential here if you're willing to hold this company or ETF for the long time. If you thought such ETFs as the S&P 500 was diversified, this new ETF here takes it to a whole new level. It has 1,507 overall stocks within this ETF. We can see down below how it's diversified. So North America takes up 43.7%, Europe 24%, Pacific is 17%, emerging markets is 14.6%, other is 0.4%, and the Middle East takes up 0.1%. We can see down here the main markets are the US, Japan, UK, Switzerland, and Taiwan make up the top 4 or 5 countries. And if we keep going down, we can see every other country involved. So there's definitely a very diversified ETF. If you're looking for diversification, this is definitely one for you. As well, in terms of weighted exposure, we can see that the financials take up the top weightings here with 24%, followed by consumer staples with 11.8%, and healthcare with just under 11%. In my own opinion, this ETF would be a bit more volatile in comparison to the S&P 500 or even the FTSE 100 at current times. However, I do feel that if you're looking for vast diversification, then this kind of ETF is certainly for you. However, I wouldn't be putting all 100% of my allocated ETF funds into an ETF like this, but I definitely would be putting a few percent in, as there is definitely a lot of upward potential, even though it can be quite volatile. Again, long term, just like most ETFs, you can't really go wrong in my opinion. And the fifth and final ETF I want to discuss, again, it's a bit more volatile than the standard ETF, and this is the FTSE Emerging Markets ETF, ticker symbol VFEM. So this ETF is currently sitting at about £52.69. This time last year it was at about £44.77. Again, like the majority of ETFs, it crashed in March, but since it has had a pretty impressive recovery, and it went up as highs as up to about just under £54 a share, and it's currently sitting at about £51.73. So again, if you're looking for diversification ETFs, this would be probably on the top 5 of my ETFs. This would probably be ranked at number 5. Again, because I feel that the other 4 have a bit more promising potential. But again, emerging markets have a lot of upward potential as well, even though there is a bit more volatility involved. But I definitely would recommend you looking into this if you're looking for more ETFs. Again, just like the FTSE All World ETF, this FTSE Emerging Market ETF also has a lot of shares in it. It currently has over 1,800 shares. We can see down below here in terms of regions, emerging markets make up 98.2%, with Europe just making up 0.2%. The top holdings, or the top countries should I say, are China with 44%. We then have the likes of Taiwan, India, Brazil, South Africa and Saudi Arabia making up the top holdings. And again, you can see the rest of the companies or countries on the list here as well. So you're definitely exposed to a lot of different countries within this ETF. In terms of weighted exposure for sectors, tech leads the way again with 24.4%, followed by financials with 20%, and consumer discretionary with 17.3%. So that's pretty much it for today's video. I just wanted to give a quick update or overview of my favorite ETFs on Trading 212. We went through my top 5 and I gave some reasons of why I like these ETFs, and we had a brief look of their top holdings as well. If you found this video anyway helpful or entertaining, it'd be brilliant if you consider subscribing to the channel if you're new around here. I'd be much appreciated if you would like this video too. And finally, probably more importantly, if you have any questions, queries or suggestions, don't hesitate to comment below and I'll be sure to get back to you as quick as possible. Thanks very much guys, and I will see y'all in tomorrow's video.